Welcome back. Well, the board of Strides Pharma, they approved a scheme of arrangement among Strides Pharma Science and Steriscience Specialties as well as Stelis Biopharma. Mr. Arun Kumar, the Managing Director and Group Chief Executive Officer at Strides Pharma Science, joins us on the show. Hi, Mr. Kumar. Good morning. Thanks so much for joining in. Well, you put out a pretty elaborate presentation. You had a con call as well, but a few details that I would request you for. One is, when do we see this?
Thank you for having me. Yeah.
When do we see this entity getting listed? Point number one, give us a timeline out there. And the second point is, since you've cleaned it out now and you have a CDMO business, a focus on that, will you be looking at any kind of capital infusion into this entity?
So this is an NCLT process, considering that it is a fairly complex merger and demerger between companies. It takes between 12 to 15 months at the outer for this to be converted into shares in the hands of the shareholders. On your second point concerning capital infusion, at this time we have no plans that this division requires any incremental cash to grow. So at this time there's no fundraising plans in this division.
Okay, there's no fundraising plans in this division, got that. But can you tell us, in terms of a timeline, what did you say the proposed timeline was?
12 to 15 months.
All right, got that. Can you tell us what is the guidance as far as, I think, okay, Ekta is also joining in, so I'll let her take over and then I'll come back with my questions. Ekta, over to you.
Hi, Mr. Kumar. Just a quick question. One of the key things is how exactly is Strides the listed entity which will have the ex-CDMO business benefit from this entire deal? What is the value unlocking for them, according to you?
So clearly, the Specialties division, CDMO, has got three parts. One is a soft gelatins business from Strides. This has been unlocked at 17 times EV/EBITDA when Strides is trading sub 10 times EV/EBITDA. So that's automatically a significant uptick in the valuation that goes to 100% of that goes to all shareholders of Strides. Second, there aren't many specialty CDMO companies globally. There are very few companies which offer the full services that we do. We can only name 2 or 3 of them. So we think that having a differentiated CDMO business allows a very different stream of capital investors to have the option to be invested in both the companies. At the same time, existing shareholders of Strides get the benefit of playing the upsides of both the platforms.
Well, Mr. Kumar, I just wanted to know what the consolidated CDMO business is going to look like, because you're extremely bullish in terms of the guidance, $200 million in FY25, and you expect that to double in less than 3 to 4 years. What is it that we can expect in the CDMO business in terms of an order book opportunities? Because you have mentioned GLP-1 as well as a significant opportunity for you all. What is driving this growth in the CDMO business, and what can we say would be a 5-year revenue outlook for this business?
So clearly, we are sticking our neck out with our guidance. So we will double our revenues from 200 million in FY25 in 3 years thereafter. And this is mainly because as a CDMO, Ekta, you will understand and appreciate that when we speak about numbers, we obviously are already contracted. The time it takes from customers signing up a product and the product getting approved is about three odd years. We do not take 100% of our customer forecast because it's a function of market. And yet, if we discount our book, we are very confident of, as we speak, in Stelis alone, in drug product combinations, of having an order book in excess of $500 odd million. So that will play through, and considering that we have a good track record on compliance and our partners are marquee customers here, we're very confident of them succeeding as much as we would consequently. We don't see any challenges. You know that I'm a little wary about guiding the business long term, but this is more a structured, contracted business, and that is why I'm very confident about the numbers that we have put out and we are very comfortable delivering those numbers.
So, Mr. Kumar, you said you'll double your revenues from $200 million in FY25 in 3 years, right? So, they were looking at what, $400 million by FY28, is it? That's the number?
With an increase, exactly, and you're right. And with an increased EBITDA of between 35 to 40%, that is mainly because of the biologics CDMO generating a very significantly different gross margin profile.
Okay. Increased EBITDA of 30 to 40% and $400 million revenue by FY28. Can you also give us some visibility on the debt? Because Stelis had sold their plant to Syngene for over 700 crores, which I think would be used to retire debt. So can you tell us what's the consolidated debt on the books, how much will be repaid over the next 12 months, and what's the eventual target?
So Stelis, on a standalone basis, the debt is reduced from 1,400 and it will be sub 350 odd crores post the Syngene transaction. Consolidated with all the three assets, the total working capital and long-term debt in the company will be less than 1,000 crores. And that reflects a debt to EBITDA of under 2.25 to almost 2 times. So we are very comfortable now with this situation to be in. Both companies have addressed the balance sheet challenges post-COVID, and both companies are performing to its past historical Strides CAGR of growth. So yes, it is a very comfortable situation to be in after several quarters of struggle when we brought the ship back to calmer waters.
All right, Mr. Kumar, for 2025, the current Strides business, that's ex the CDMO business, will do an EBITDA of at least 750 crores?
Yeah, so what we also mentioned in our release is that we will recoup all the revenues lost, which is 500 crores, and 150 crores of EBITDA, which moves into one source. We will recoup all of this in the next financial year itself. And that's based on very strong pipeline of product launches. As you probably know, we have over 150 products that are not launched in the US, which are not part of one source. And we have a strong visibility of at least 60 product launches. Our momentum of product approvals have increased significantly in the recent past, and we think that will continue, and including products that we acquired from Endo with the facility in New York. So all of that is adding to momentum, and we're very confident to guide that the next year, the revenue and EBITDA loss will be completely recouped.
Okay, well, thanks a lot for joining in. Appreciate your time here on CNBC TV18. So the listing of the new entity in the next 12 to 15 months, $400 million revenue by FY28 and an increased EBITDA of 30 to 40%. Debt is also going to go down quite a bit. But let's